Cassini Resources and Oz Minerals have announced an updated scoping study for their West Musgrave nickel-copper project in Western Australia. This has resulted as an increase to our valuation for Cassini to 34 cents per share. By far the biggest difference compared to previous studies is the significant increase in the processing facility's throughput capacity to 10 million tonnes per annum. This has led to numerous other changes, including the mine life and grade, capital and operating cost assumptions. However, overall, this was a strong result and highlights the long-term potential for the West Musgrave project to become a significant nickel and copper producing asset. We believe the size of this facility was not previously considered by Cassini due to the capital cost, therefore funding requirement. However, with Oz Minerals now earning up to a 70% interest in the project, and more importantly, the financial backing they bring, the size of the capital cost, whilst remaining important, is no longer a showstopper. Rather, we believe their focus was on a long life, low operating cost project, which was achieved. This is highlighted in the graph, with West Musgrave being one of the lower cost nickel producers globally, which would have remained profitable even at the recent low nickel price. We also note that on a copper equivalent basis, the project is not only one of the lowest cost copper operations globally, but would also potentially become Oz Minerals' lowest cost project. We also believe it is worth highlighting that typically investors in the junior resource sector will require a project's NPV to be significantly greater than the initial capital cost. However, with long-life major mining operations such as this, looking at the NPV alone has limitations. Major operations typically focus on the project's internal rate of return, low operating costs, and significant undiscounted operating margins at lower commodity price assumptions, which again we believe this study has achieved. Finally, we note there has been a recent significant increase in the valuation for a number of companies which own large nickel laterite projects. And whilst these projects are now marketed more for their cobalt potential rather than nickel, in the long term, it is likely they will still be classified as nickel projects. The graph highlights the significant difference in market capitalisation of Cassini compared to this group, despite West Musgrave having one of the larger resources, as well as being the only sulphide project of this select bulk tonnage group of peers.